All right, so welcome. We are preparing for homeownership. Specifically today, we are discussing our VA options for our veterans and current active duty reserves. So today we're actually going to do our welcome, and then we'll do our introductions, and then we'll go over the home buying process, and then Laura will discuss VA options, and then from there we'll discuss just credit things, and we will not discuss down payment assistance because today we're discussing VA, and with the VA program there are no down payments required. So from there we'll just breeze past down payment assistance, and we'll start discussing any questions that you have based on the information that's presented. All right, so my name is Kelly Adams. I am a realtor in the Atlanta area. I always joke because you hear a lot of people say I'm an Atlanta realtor. Well, I'm a Georgia realtor. I'm all over Georgia. Seriously, as far south as Griffin or Macon, as far north as sometimes Gwinnett, but definitely Woodstock, as far west as like Carrollton, Billerica, like Carroll County, and as far east as maybe Conyers, Covington area. So I am an Atlanta native. I've been here for 40 years, and I am a wife and mom. I have two boys. They're 10 and 6, and I've been married for about 11 years, almost 12 years. This year, I think it's 12. Other than that, I do have a passion for health and wellness. I love music, can't sing, love music, love to listen to music, but that's kind of like my thing. My interest in real estate actually began in 2006, where I actually majored in real estate as an undergraduate student. And then from there, I've pretty much dedicated my real estate career to educating future buyers and future sellers and investors, and second-time buyers. I host these things pretty much monthly just to get the information out there, just so people are aware of what their options are and how to do, and just learn how to do what they're trying to do if they're trying to become a homeowner. All right, so who's on here? Who's a first-time home buyer? All right, Carol, Linda. Okay, good. Janelle. All right. Brenda, all of you are first-time home buyers. Judy. Wow. Zara. Okay, good. So pretty much everyone. Jessica, good. Okay, awesome. Well, this is going to be great information. I hope you're taking notes. If not, if you're not in position, maybe you're traveling, maybe, what else could you be doing? I don't know, but maybe multitasking, and maybe you can't take notes. I am recording, and I will send out the recording afterwards. So you'll get it usually the next day. So tomorrow you should have it in your inbox. So good. Thank you all for joining. So another question, why do you want to purchase a home? What makes you want to purchase a home rather than relocating and just finding a quick rental? What made you decide that perhaps we should look into owning versus renting again? Stop paying rent. I know, right? That's a big one. That's huge. So let's see, I think I got one more. Wealth building. I love that. That's huge. So a place to call home, that's what I hear a lot. Stability, you want to get somewhere, you want to stay. You don't want your next move to be determined because maybe your rent goes up, or maybe you have a horrible landlord. It's all sorts of things that I hear. Um, some people are looking for another stream of income. So, not necessarily, I mean, your primary resident is an investment, but sometimes I'm helping someone purchase a, income producing property. So, purchasing could be for income reasons as well. All right. And so what are some benefits to home ownership? Obviously, you want to stabilize your costs. You have the opportunity to gain equity. There's also tax benefits to homeownership. So you can write your taxes that you pay off annually, as well as your interest that you pay on monthly with your mortgage. Obviously, not only are you stabilizing your costs, but you're also stabilizing your family. You're, you know, providing some stability in regards to where you're staying, especially if you have children. You don't necessarily want to move, annually and have to pull them and sometimes even, take them out of their school or district and things like that. So that's always a great one. And so I've also helped individuals um, use their home to make other investments. So for instance, if you purchase your home, you know, your appreciation or your value goes up in your home and you're paying your monthly mortgage. Obviously, you're paying what you owe down, and that difference between what you owe and what your home is worth gives you your equity. And some people think that with equity, you actually have to um, sell your home to tap into your equity, and you don't. There's other ways to go about tapping into that equity. And sometimes you use that equity to, purchase another home, invest in a business, send your kids to school, pay debt. I mean, there's so many other things that you could do and so many ways that you can tap into it. But that is another added benefit. So right before we get started with house hunting, so ladies, once you make your transition, or even before, I have some clients now that are in California that are looking at properties here. And, we're just kind of keeping our eye on properties. Sometimes I'll go out and I'll take a tour of the property. I'll do videos. If you have a, iPhone, I may FaceTime you, give you a virtual tour, also get some footage and send it over to you. And then we'll plan to actually come back once you're in town. So maybe, 30 days or, a couple weeks from now while you're in town, and pending the home is still available, we'll go back out and kind of get a feel for it and let you get a feel for the area and see how that goes. But before we get there, the first thing you want to do is get a pre-approval letter from your lender. And we also want to talk about your home specifications. We want to know, I want to make sure that I'm looking in the right area. What's important to you, what's important to your family, in regards to the community, in regards to the school districts, and then we're also thinking about what that home actually encompasses. So, how many bedrooms are you looking for? How many bedrooms and bathrooms are you looking for? Do you need a yard? Do you want do you want a large yard, and do you want what is it, a townhome, where you don't have any maintenance to worry about in regards to your lawn? Maybe you want the HOA to take care of that. So whatever you're looking for, it's kind of, particular, it's specific to you. And we definitely want to make sure that we're looking in the right direction for what you're looking for. Also, you want to secure your upfront costs. And so upfront costs are pretty standard. And so we're going to tap into that. Your upfront cost is going to be your earnest money. So your earnest money is your good faith deposit. This is basically saying, hey, I really like your home. You're talking to the seller in your head. I really like your home. Here's my offer, but along with my offer, here is what I'm willing to submit as earnest money. This is a deposit. This is showing that I'm really serious. And usually your deposit is going to be 1% of the sales price of the property. So if you're looking at a home right now, the average home price in Atlanta is $488,000. Obviously, depending on the area, it could vary. But if you're talking about Atlanta, 488 is the average. Now, if we're looking further south, then we're in the 300s. If we're going out in the outer skirts, maybe outside of the perimeter of Atlanta, then we can get lucky around that 300, 350 mark, somewhere along in there. But otherwise, so let's just say hypothetically, we're looking at a property that's $400,000. That property, that earnest money would be $4,000. There's also a home inspection that is not required, but highly, highly, highly recommended. In this case, the home inspection is going to be it's going to be about $400. And it really depends on the size of the property. So if your home is 4,000 square feet or less, then expect about $400 for your inspection. I'm sorry. If it's a larger home, 5 or 6,000 square feet, expect, $500 or $600 for your inspection. Now, again, the inspection is not required, but it's highly recommended. The inspections are going to reveal defects in the property, things that are not working properly, not necessarily cosmetic issues. We're looking for, shingles missing, roof leaks, plumbing issues, electrical issues, anything of that nature. Maybe the garage doesn't open all the way, or maybe it doesn't work at all. Just little defects that maybe it's a faucet leak. So all sorts of things like that. Now, the appraisal is another upfront cost. And this particular piece, it is a requirement. And so for appraisals, especially if you're getting your property through a mortgage, if you're not paying cash for your property, then the home appraisal is required. And so the appraisal would be around $550, give or take. It really depends on the lender. I've seen them as low as $450. I've seen them as high as $650. And so let's see, we had one question here about termites, and that's really good. So as a VA buyer, it is a requirement that the VA has that a termite inspection does have to be done on every single loan, to my knowledge. And Laura, correct me if I'm wrong.
Yes, that's correct.
Okay. So typically for me, I have the owners, I usually ask for them to get the termite inspection done. Very seldom they say yes or no. And then if they say no, then you get your own termite inspection. But generally, I ask the sellers to get it done prior to closing. And that's a requirement for your loan to be cleared through the VA. That's a great question. Thank you, Carol. So yes, so termite inspection is required on all VA purchases. All right, so now you found your dream home. Now what do? You make an offer, you provide your earnest money. We may negotiate. Maybe they don't like everything about your offer. Maybe maybe the seller wants to close earlier or later. Maybe they're traveling, maybe they don't like your earnest money amount. Maybe they want a longer, not really a longer, maybe they want a shorter due diligence. Maybe we did a 10-day due diligence. And I don't know if I mentioned what due diligence is. I don't think I did. So you make an offer, your offer is accepted. Due diligence starts immediately on that day. And so generally, most times you have 7 days due diligence, and that's the time that you take to have your inspections done and really just make sure that that's the house that you want. During this time, you have your inspection. Typically, I like to have the inspection done like within about 2 days of going under contract. Once your contract has been accepted, you're officially under contract because now both parties have signed. The buyers, the sellers, boom, we're committed on both sides. So from there, you have typically 7 days. It could be 5, it could be 10, it could be 3, just depending on how aggressive we have to go to get the house that you want. But usually about 7 days due diligence, you have your inspection done. I like to have it done earlier so that we have time to negotiate repairs that may have to happen for the property. Now, there's no perfect home. I always like to tell my clients this because a lot of times we want a house to already just be in this spectacular condition when there are new construction homes that we have inspections on that come back with 66-page or 69-page reports because things weren't properly installed. Shingles are missing. I've had gas leaks. I've had so many things. Maybe the appliances aren't, connected properly, or maybe they're not even working. You'll be amazed the type of things that come back on new construction. So when you think about resale, you have, depending on how old it is, you have some sellers that, just are stellar and they just take care of their properties and it's like new. But then you also have some sellers that are just like, dude, what have you done for the past 10 years? No, you would think that a new home is problem free, but it's not. And the great thing about most new homes with those builders is that they do provide warranties. So a lot of times, you know, it takes some time for you to get in there, move around, live in it, and then, you know, you may have some defects to pop up. So luckily, most builders, and that's something that I would highly recommend if you are going to go new construction, definitely ask the builder whether or not they have warranties, which they should have to have them for new construction, especially for VA, if I'm not mistaken. So yeah, so due diligence, 7 days. We have enough time to negotiate repairs. And there's a couple things that could happen there. I mean, we could have a great seller that's just like, sure, I'll fix these 10 or 12 things. Not a problem. And I'll have them done prior to closing. Great. That's in a perfect world. Do we live in that world? No, we don't. So sometimes the sellers are not financially equipped to make those repairs. And that's sometimes why they're selling their home. Maybe they need the money. So in those cases, what do we do? Now, the seller can pay an actual contractor at closing. That's an option. Or they can, well, that's an option. We'll leave it there. Let's see, we have something else in the chat. That makes a lot of sense. Yep, absolutely. So if a lot of people, if you see, you know, a seller and they're just like, hey, I would love to fix this, but I don't have the funds, you know, we renegotiate. Okay, well, then we have some contractors come out, get some quotes, and then we'll decide, okay, which vendor would you like to go with? Okay, this vendor is charging you $3,000. Well, then the seller would, you know, pay $3,000 out of their proceeds at closing to that particular vendor to make those necessary repairs. And they can just be done before you move in. So that is an option. So from there, you just want to maintain contact with your lender. At that point, you're just getting in documents. You know, your lender may ask for updated W-2s. They may ask for updated tax, maybe updated check stubs, updated bank statements, things of that nature, because those things change. You know, as weeks go on, you have a new check, you know, things change in your bank account, things of that nature. So those types of things you want to make sure that you're in contact with your lender on. All right, so this is just a little estimate, kind of like a little review of what the financial overview would look like for a property that's $300,000. And I probably should have updated it, but I think you'll get the picture from it. So let's say you have a sales price of a property that's $300,000. Again, the earnest money is 1%, so earnest money is $3,000. And then the sales price is $300,000. I don't know if I said 3,000 or not, but 300,000. Earnest money is 3,000. Home inspection, again, $400. Home appraisal. Oh, and I don't think I told you what the appraisal is. So the inspection kind of give you the difference. The inspection gives you defects, things that are problematic in the property. The home appraisal it's telling the lender how much the home is worth, because what they don't want is for you to pay more for the home than it's valued. So the appraisal is for market value. You just want to make sure, hey, this house is truly worth $300,000 and it's, you know, not worth less. So that's what the appraisal is for. So upfront costs in this particular property would be $3,950. If this is a $4,000 home, then you're looking at $4,950. So about $5,000 upfront is what you'll need to put down your earnest money, you know, pay for your inspection, and then pay for your appraisal upfront. Now, down payment, the beauty is, as a, you know, VA buyer, you don't have a down payment. So this right here, just pretend it's not even here. You know, if you did have to pay a down payment, this is what it would be at 3.5% down if you're putting down the bare minimum, which is 3.5% traditionally. So in this case, there would be no down payment because that's one of the benefits of VA loan. Closing costs are typically about 4 or 5% of the sales price of the property. And closing costs are going to be costs that are associated to closing your loan, like paying your lender, paying the closing attorney, any of those like settlement fees, and then like fees that are associated with just like administrative fees for the county for recording the deed and, you know, all of those things. So those admin tasks, lender tasks, and closing costs. I'm sorry, closing attorney costs. Can you email this slide? Print is a little tiny on the right hand. Oh yeah, for sure. Yep, I can do that. Let me make a note of that while I'm just saying sure. And actually, I don't have a pen here. All right. Hopefully I can remember that. All right, awesome. So at the very bottom, here's the great thing about earnest money. It comes back to you as a credit at closing. So you don't lose it. So that's your deposit, but it also comes back to you here as a credit, as you can see. So in this case, I do apologize, I didn't update this. So it's not all the way accurate. So I'm hoping you can follow me with it. The earnest money comes back. On this, I just said, hey, the seller contributed $3,000 towards closing. So you're getting your earnest money back of $3,000, and maybe the seller gives you $3,000 towards your closing costs. Sellers can assist you with closing costs. Is it their responsibility to? No, but they can. And sellers have been lately, and usually more than $3,000, I'll be honest. All right. So in this particular case, you have your closing costs, and I'm just estimating 10,000. Pretend this 20,500 isn't there. You receive your earnest money credit of 3,000. Your seller contributes 3,000 towards your closing. And then you're left with 4,500 approximately at closing, final cash to close. So posted this 14,500 because again, actually it'll be 4,000. So actually, oh God, let me just edit it because I feel like it's a little, I'm gonna stop here. Give me one moment. All right, so while I edit this, does anyone have any questions based on what we've covered so far? Hello? I'm gonna stop here. Give me one moment. All right, so while I edit this, does anyone have any questions? Give me one moment. All right, so while I edit this, does anyone have any questions? Give me one moment.
Getting a lot of reverb here.
All right, I'm editing. Any questions so far? And Laura, is there anything you'd like to add that maybe I missed just going over this?
Well, regarding another credit, we as a lender can always give another credit, a lender credit, to help reduce their out-of-pocket money. And then there's several other things that we need to cover on a VA home loan. For example, the seller can pay off the buyer's debts to help them qualify up to 4%.
Up to how much percent?
4.
Now that I don't think I knew. All right, I'm all updated, I think, I hope. Okay. All right. All right, so in this case, we're going to review here. So sales price of $400,000, earnest money is $4,000, home inspection is $400, home appraisal $550 plus or minus, depends on your lender. And then so total upfront costs are $4,950. There's no down payment as a veteran or a VA buyer. So I'm estimating closing costs at $10,000. You have your credit of your earnest money coming back. Actually, this should be 4. So I still made a boo-boo, but it's okay. So for the sake of this, let's just go with the earnest money at 3,000. Seller contribution, 3,000. It's an estimate of 4,000 at closing. So kind of give you an idea of how things flow here. Let's see, I have 2 things in chat. I will remove the zeros, and the sense makes it easier to read. Okay. Interesting. Never knew that about the seller. Okay, so Carol, is that regarding the seller being able to pay down the debt up to 4%? Probably so, because I don't think I said anything else. All right, so this doesn't apply to our VA buyers because you don't need a down payment. We talked about the difference of down payment and closing costs. Yes, okay, good. All right, and so the last couple things here that I always like to go over is that when you're purchasing a home, a lot of times you're just like, how much is this and how long is this? And just some little, just frequently asked questions is kind of what I'll go over here. So how long does it take to find a real estate agent? And honestly, that really depends on you and how detail oriented you are. Are you, trustworthy of a family friend or coworker to say, hey, I have a great realtor. They help me, and boom, you have a realtor in like a day. Or, do you want to interview 2 or 3 agents and, kind of do some research on them? Then it may take a couple of weeks. So it really just depends on your preference and how you're looking for agents. Aside from that, let's see here for a loan approval, your pre-approval, typically what, Laura, 24, 48 hours, you could have a pre-approval just depending on how quickly you get your items in. But to get a full loan approval, it probably is going to be about 2 weeks to have that done. After you've gotten a contract, you've submitted that contract, your contract has gone to underwriting, and they may come back and forth and ask you for additional documentation. So about 2 weeks, maybe 3. So a showing, when you're going out and you're, looking at homes, depending on how large the property is, it could take anywhere between 15 minutes to 30 minutes. So I need to update this. So 30 minutes to an hour. We shouldn't be in a property for an hour, not unless we're like, what could we be doing for an hour? I have no idea. I've never been in a property for an hour. I can't say that I have. But otherwise, 15 to 30 minutes, I can say that I have driven to properties. We didn't like the area. Maybe the photos, didn't look like the home, or the community is just not what, my buyers, were comfortable with. So in that case, we just went on to the next home, and that's perfectly fine too. So how long does it take for an offer to be accepted? So if you saw a property today, maybe we went out, it's a beautiful day in Georgia, by the way, but you went out, we saw a beautiful home, you decided to put an offer in on it, you could expect typically within about 1 to 3 business days generally for you to get a, offer response. Typically for me, I like to ask for 24-hour response. And, depending on if the seller is traveling, maybe they're in a different time zone, things of that nature, we have, those things that happen, but typically about a day or 2. And then with a inspection, it takes typically 2 to 3 hours, depending on the size of the property for an inspection. And typically we get the inspection report the same day. It can take up to 48 hours for the results, but typically with the inspectors that I use, it's going to be about, usually by the close of business, you should have your inspection report. The appraisal is a little bit longer. It's going to take a couple weeks, sometimes a week. I mean, here lately, a week has been appropriate, but it can take up to 2 weeks to get an appraisal back. This is because the appraiser comes out. They not only look at the home, but they go back to their office and they do like all of these evaluations to find 3 different methods of, what the market value could be. So it takes a little time. And then they pull data from the community and, recently sold homes, things of that nature. So other than that, once you do find a property and you go under contract, it usually takes about 30 to 45 days to close on your property. So those are just the little Q&A here. Now, these are buyer do's and don'ts. This, for buyers, you definitely want to know your credit score. You do want to shop lenders. You also want to understand the home buying process. So it's very good that you're on here just getting this information. And you certainly want to work with a skilled realtor. You want someone that knows the market. You want someone that understands contracts, and that's also, going to work in your best interest. Aside from that, you do not want to change jobs. So if you are employed, you don't want to change your jobs while you are under contract. You don't want to buy a new car. You don't want to be a co-signer for anyone on anything. You don't want to apply for any new credit. Absolutely not. Now, I joke with my buyers because honestly, Up until closing, we just want you to go to work, eat, pay your bills, and that's it. After you've closed and you've signed, go wild. Yeah. So any questions there? Yeah, go wild. I mean, I've had people go and buy like nice cars right after closing. Totally up to you. All right, so I think Miss Laura, you are up next. Laura and I, we've done a lot of different loans together. VA has been one of them. But Laura is great at what she does. We've been working together for about 4 years. And I actually met her on a home that I had listed in Austell. She represented the lender for the buyer, and I really liked her style. I liked her communication. You know, she kept everybody up to date. She answered her phone. She works evenings and weekends like me. And so who doesn't love that? So, Laura, I am going to unshare here, and you let me know what you'd like for me to share on your behalf.
Hi, everyone. Thanks so much for joining. The first thing, Kelly, and I think one of the most important things is the VA residual income chart.
Okay. Okay. Was that the one that you sent today?
Yes.
Okay. I'm pulling it up right now. Residual income. I have it. So I'll share that. Let me download that. Okay. Okay. I just went ahead and downloaded all of them in case you want me to pull them up. So I will pull up this thingy here. It's thinking.
Oh, I know how that is. My computer has been so slow.
Like, what's going on? Now, this is abnormal.
Wow.
All right. Let me try one thing. I guess I can just pull it up from the email. It'd be faster. Is that
Okay.
it?
Yes. Yes. Now, VA residual income is money left over after all is said and done. And it goes by family size, and it also goes by region. So those of you that are in the Northeast, Midwest, here in the South, or out West, for example, if you have, well, let's just use two. So one of you said it was your boyfriend that's a vet. If you are in the South, money left over after all is said and done would have to be $738. And
And when you say after everything is said and done, what are you referring to?
that is after the mortgage payment, any debt that you're carrying, that type of thing, based on your current gross monthly income. that is the amount that you would have to have left over, $738. Now, if this residual income is not met, then the loan will not fly. So in a case like that, you may have to pay off debt. Maybe the seller can pay off a debt for you to get you to wherever you need to be for leftover money. Does that make sense? Does anybody have, I can't even speak today. Anybody have questions on that?
We have something in the chat. Let's see. Does this
Okay, student
include-
loan.
Mhm.
There is a specific calculation for student loans. And all programs are different in regards to the calculation of student loans. With VA, they just take a percent. Okay, most people's student loans currently are deferred. A lot of them have a zero balance. We cannot count zero. The only time we can count zero is on a conventional loan. And VA has a specific calculation for that. They'll take 5% divided by 12. And that's what we have to count as student loan debt. Student loans are very problematic for a lot of people. But now a lot of them are currently being forgiven. So if you have student loans and if you haven't applied for student loan forgiveness, you need to do so.
So this particular loan doesn't do how FHA and conventional does in regards to like the IBR payments.
Correct. Conventional, if your current loan is deferred and your payment is zero, on a conventional loan, that's what we can count is zero. On
Okay.
an FHA loan, we have to count 0.5% of each student loan, unless you're on an income-based repayment plan.
Mhm.
And on an FHA loan, it cannot be zero. It's got to be $5, $10, some small amount. And then that's all we would count. But VA has a different calculation for that.
Hmm.
Now, the states that are covered, that's states per region, Kelly.
Mhm.
I
Oh.
think I sent you that one as well. Yeah. So for those of you up in the Northeast, which is where I'm from originally, these are the states that they cover. The Midwest, South, there's a lot, including Puerto Rico, which is great. And then out west, those are the states, that are covered. It's covered per region. And these states, for example, here in the South, you would look, or we would look at the residual income for the particular state that you're purchasing in. But the residual income is very important. And we run these loans through an automated system. It's called Desktop Underwriter and Loan Prospector. Loan Prospector is a little more forgiving when it comes to credit, income, debt ratio, that type of thing. But if that residual income is not met, the loan will not be approved. But then we'll guide you as to what you would need to do to get to that amount. Does anyone have questions on that? Okay.
We have one question or something in the
Oh,
chat.
wait a minute. Let me get
Oh, no, it just says okay.
let me get that up here.
No, it just says okay. There's no question.
Yeah, it's just okay.
Okay. Well,
Okay.
we might have something. Let's see.
All right, let's go to the VA funding fee.
Okay. Which one is that one? Did you send that one today?
I did.
Okay.
Or maybe I didn't. Well, wait a minute. Let me Let me send this to you. Maybe I didn't send it to you.
States per region, length of service, servicing spouse eligibility.
Let me send it to you because that's important as well. Let me try to figure out my email here. Okay, I just sent it.
Okay.
Now, the VA funding fee is VA's version of mortgage insurance on the loan. Now, if the veteran has any type of disability compensation, it would have to be 10% or greater, and then they're considered funding fee exempt. Okay, this is the funding fee. So if this is the first time that you're using the VA eligibility, obviously you're going 100% financing. So that funding fee is 2.15% of the loan amount, and it would be financed into the loan. Now it goes to 5% or more down, 10% or more down, but typically VA buyers are not putting money down.
Right.
And again, if you receive any kind of VA disability whatsoever, if it's 10% or greater, you're funding fee exempt, so you don't pay that at all. Now, after the first use, for example, you buy your home and you used your VA eligibility for the first time, you stayed in a few years, you sold the home, you made some money, now you're buying another home, but you're going to use your VA eligibility again because you can use it time and time and time again. So for the second usage, it would be 3.3% of the loan amount if you were looking for 100% loan. And again, that is financed into the loan. But again, if you receive a VA disability of 10% or greater, you're exempt and you do not pay that. So that's important because when we roll this VA funding fee into the loan, of course, it increases your loan amount slightly, which increases your payment slightly as well. All right. Surviving spouse. And I know this may sound a little morbid, but a lot of people are not aware of this. Okay. Surviving spouse, be it male or female, if this person died on duty or died of duty-related causes, then the surviving spouse can use that VA eligibility. A lot of people aren't aware of that. You know, husbands were in the war and, you know, they didn't make it. And now the wife is like, okay, how am I going to buy a house? Use your husband's VA eligibility. Or the husband can use the wife's VA eligibility. But a lot of people aren't aware of that. All right, I thought I had sent you one more, but maybe I didn't. Okay. VA loans, they're very, for the most part, very straightforward. They're 30-year fixed rate loans, 100% financing. There are no loan limits on a VA loan. You can exceed the conforming loan limit as of 2020. That had gone away. I mean, you can go up to $1 million, a little over $1 million now on a VA loan, but do you want that kind of payment? You know, that's just something to think about when you're applying for any loan, actually, not just a VA loan. There are credit score requirements. We will go as low as 580 as far as the credit score is concerned. Now, we'll probably, when we run it through our automated system, get a refer. There's only two things that we can get. We can get a refer eligible, or we can get an approve eligible. If we get an approve eligible, we're home free. We get a refer eligible, we have to keep it within ratio, which would be 40% housing ratio. That would be your housing payment could not exceed 40% of your monthly gross income. 50% total debt ratio. That's credit cards, student loans, car payments, whatever kind of debts you have, plus the proposed housing payment could not exceed 50% total debt ratio. Does anyone have questions on that? All right, this is a new program that Kelly has up here. This is with the Department of Community Affairs, which is under the Georgia Dream program. And Kelly, I was pulling up their guidelines on this program and I couldn't get into the lender online. Now, with Georgia Dream, that's what we call it, Georgia Dream. Typically they want tax returns, fingerprints, they want the whole ball of wax. But now for a VA loan, we don't require tax returns unless, number one, you're employed under a 1099 where you're responsible for your own taxes, or you're just, strictly self-employed. If you're just W-2 wage earner or salary, then all we require are W-2s. Now, Georgia Dream, or DCA, Department of Community Affairs, they established this new program. It came out last month, where they're offering, veteran, active duty service member, military family member, a VA loan at a below market rate. Their below market rate is 5%. One thing, and I'm just going to be honest with you, one thing that I am not sure of right now is the documentation that they're requiring. Typically, they want to see tax returns, but that is not a VA requirement, again, unless you're 1099 or you're self-employed. So I need some clarity on that, and I couldn't get onto their website to get that information. Now, the Georgia Dream program is a down payment assistance program, but under this VA below market rate program, you cannot layer it with the standard Georgia Dream program. You can layer it with other down payment assistance programs, but not with the Georgia Dream down payment assistance. So, for example, Georgia Dream, their down payment assistance. If you're in the medical field, you work for a hospital. I mean, you could wash dishes at a hospital and still get $12,500 in down payment assistance as long as you're paid by a hospital. Now, the standard down payment assistance for this particular program is $10,000, but you cannot use this under the VA program. Any questions on that? Other than the below market rate, Georgia Dream just, yeah, this is the flyer, the program guidelines, but this is not, unfortunately, all the guidelines.
Okay.
But other than the below market rate, quite honestly, and I've been in this business now almost 40 years, so I've seen it all, done it all, and got the t-shirt. Other than the rate, there's no other benefit to going under that Georgia Dream program. I mean, we can still get on a VA depending on credit scores, roughly 6%, that type of thing. I mean, I'm not adverse to doing that loan, that type of loan, but it is not a quick fix, and you're looking at a good 45 days to close. And it goes, of course, through our underwriter, through bond, and through Georgia Dream.
Anytime I've used Georgia Dream, it's been
It's
60
a
plus
process.
days.
Yes, it's a process. It's a process. And I let everybody know that up front. You know, it's not, you're not closing in 30 days, where typically you can close I've closed a VA loan in 15 days. But
Wow.
a lot of it depends on the buyer. How
Mhm.
quickly or can you submit the information that I requested from the checklist that I sent you? And, you know, the quicker you do that, the quicker we can, you know, move it through the pipeline. Now, someone had a question. Someone has a boyfriend that's a vet. Who was that?
I think it was Jessica. Oh no, it's Janelle.
Okay. All right. Currently, the VA doesn't expressly prohibit non-spousal co-borrowers. It would still be a joint VA loan. But the agency tells VA lenders that it will only guarantee the eligible borrower's portion of the home loan. So that leaves a chunk of the mortgage without government backing that the program relies on.
Unless he just did it himself.
Correct.
Mhm.
But whoever it is, I mean, you have a girlfriend, a fiance, or whatever the case may be, you may need that income, that additional income to qualify.
Got it.
And that changed not long ago. I mean, it's fairly recent, although they would allow that.
Okay.
Yeah. That's that on that. And going back to the seller can pay off debt. Now, that does not happen often. I've had numerous instances where it has. So, for example, they have a couple of credit cards that they have to pay off to get their ratio down so they qualify for the loan. The seller can pay, you know, X amount in closing costs, but we can use part of that money to pay down the debt load. And that would wipe that out at closing. So then they would qualify, which is great.
Mhm.
And then I always give a lender credit on all of my loans, you know, at closing to help reduce the out-of-pocket money.
Mhm.
If there is out-of-pocket money, sometimes there is, sometimes there isn't. Now you can't finance closing. The only thing you can finance on a VA loan is the funding fee. You can't finance closing costs like you can on a USDA loan, you know, that type of thing. But a VA loan it's a great loan. I love doing VA loans. I've done a gazillion of them.
Yeah. Lenders love VA loans.
Oh yeah, VA, USDA, and of course the, you know, Old Faithful FHA,
Mhm.
you know, are always great. Credit scores though are a big deal. Now, when I talk to a client and the credit scores aren't typically where they need to be, I'll tell you, you need to do XYZ to get your credit scores up, and then I do a rescore. It takes 3 to 5 days. So I don't leave you, you know, high and dry saying, well, you know, your credit scores are a little bit low. Come back when you know, have raised them. I'll tell you exactly how to get from point A to point B.
Mhm. That's happened numerous times in the years that we've been working together. So that's one thing I do like too.
Mhm. Does anybody have any questions? Now, those of you that are in New York, Pennsylvania, if you don't plan on moving south, um, cross-country mortgages everywhere. So, you know, we can refer you. But there were a couple moving, one moving to Atlanta, one coming to Georgia.
Mhm.
Of course, you know, the cost of living is so much cheaper down here than it is up there. And I'm from upstate New York myself.
I wanted to talk about just some things that I've noticed with VA loans. I think you touched on the funding fee being waived with disability.
Correct.
That's one. And then another benefit that I've seen for VA buyers is the property taxes sometimes being lowered.
They can be lowered. What we see most, for example, if the veteran is 100% disabled, and their disability benefit is 100%, their taxes, property taxes, once they go down to the assessor's office and present their documentation, would be next to nothing.
Mhm.
Yeah. So that's
Also no PMI typically.
no PMI, which is private mortgage insurance or standard mortgage insurance on a conventional loan. The VA funding fee is VA's version of mortgage insurance.
Mhm.
Now that's financed into the loan. On typical loans, FHA, conventional, you have an option of paying that up front, but you do have that monthly.
Right, but say for instance, they're eligible for the waiving of that funding
10%.
fee.
Their disability has to be 10% or greater,
Mhm.
and then they're funding fee exempt. So they
Right,
don't
so
pay
in
it
that
all.
case, would they have PMI?
No,
Okay,
no. On a VA loan, there's no monthly PMI, no monthly mortgage insurance. It's just a one-time funding fee that's financed into the loan. But if
what's
they're funding
interesting,
fee exempt, it doesn't exist.
right, what's interesting is that with the FHA loan, there's a funding fee with FHA and there's private mortgage insurance, correct?
Correct. It's called MIP, or PMI, private mortgage insurance, or MIP, mortgage insurance premium. It's an
Mm-hmm.
upfront on an FHA loan. It's 1.75% of the base loan amount.
Mm-hmm.
That's financed in. And the monthly is 0.55% of the total loan amount.
So that's definitely a benefit having
For
VA.
VA, absolutely. Absolutely.
Okay. Yeah,
Yeah,
that's what I wanted to point out because there's no PMI monthly PMI. And
correct.
you do have the option of potentially having lower taxes.
Correct.
I feel like there was something else. We said the funding fee.
The
Maybe,
funding fee is a big deal.
yeah.
Whether or not they're exempt. I mean, if they're on active duty right now, obviously they're not collecting a disability benefit. So they would pay that upfront, which is financed into the loan. So it's not out of pocket. They could pay it out of pocket, but I would never suggest that.
Yeah. Okay.
Um, I'm looking to see if there was one. I sent you the surviving spouse because I have one of those right now. Oh, the length of service requirement. Okay. I think you have that one.
Let me see. Yes, I do have it. Okay, I'll pull it up. Length of service.
Okay. So standard military is 2 years of regular service. If you're a reservist or if you're in the National Guards, it's 6 years. Now, if wartime, it's 90 days of active duty during wartime, or 181 days active duty during peacetime. Now, a lot of people say, well, okay, how can I get my certificate of eligibility? Well, you can go on, the VA website, you can get it that way, but that's something that we normally request. So we get that for you. If you want to get it for, just to have it, in your records, that's fine. Go on the VA website, call VA, they can email it to you, that type of thing. One thing, of course, that we need, for example, and those of you that are veterans, thank you for your service. We're a Navy family, as well. One thing we do request is if you're discharged, we do request the DD 214. Now, the DD 214 is like gold. So if you have that DD 214, if you've done your time in the military, now you're out in the civilian world, you need to take that DD 214 and you need to file it in at the magistrate court in whatever county you live in. So it's there, and you don't run the risk of losing it, because if you had to get a duplicate copy of a DD 214, it's like pulling teeth. It takes forever. So that's an important item as well. If you're still on active duty, what we request is an active duty letter from your command for the loan. So if you're out of the military, it's a DD 214. I strongly suggest recording that in whatever county you live in. If you're still active duty, then it's an active duty letter from the command, which is a requirement for the VA loan. Does anyone have questions on that? Oh, wait a minute, I see a question. Oh. Anybody have questions? Like I said, VA loans they're very easy. They're simple, they're straightforward. The only other documentation that we need, again, would be the DD 214 or a service letter, active duty service letter from the command. Other than that, it's just the standard bank statements, W-2s, pay stubs, driver's license, social security card, that type of thing. It's very simple.
Laura, have you ever done an assumable VA loan?
They are assumable, and I have not done one recently. I did one some time ago.
Mm-hmm.
The VA loans are assumable, FHA loans are assumable, but you still have to qualify as far as credit and income
Mm-hmm.
is concerned. You can't just take it over.
Right. Okay. I have a property in Ackworth right now that is listed for sale. It's in a gated country club community. And my seller has a VA loan that he has under 3%. It's like a 2.85%, where it is assumable.
Right.
However, we are looking for, anyone can come and purchase it, but we did receive an offer on it from a non-VA buyer, in which his entitlement would be kind of held up if he were to let a non-VA buyer assume the loan.
Right.
Mm-hmm. So we
Right.
didn't go
That's
that route. So if it is assumed, it has to be a VA buyer in his case.
That's correct.
Mm-hmm. Just so he can still have options when he leaves. I mean, he's only been in the home for 2 years, so technically they would hold the property up for 28 years before he could actually use it.
Exactly. And most veterans, I mean, that VA eligibility, I mean, that is definitely something that has been earned.
Yeah.
And you want it back.
Absolutely. Yeah.
Yeah.
Yep. So overall, 580 minimum credit score, DD 214 or active letter from who?
The command.
The command. General documents, W-2s, check stubs, bank statements, ID, social security cards, to get qualified, right?
Right.
Okay. And then just the overall synopsis of what's being offered, 100% loan, which means there is no down payment. There is a funding fee. It's depending on if it's the first time using it, which it sounds like it would be a lot of first time users. And then from there would kind of depend on whether or not there's any 10% or greater disability with those VA eligible buyers to determine
They would be exempt.
if the funding fee can be exempt. Perfect.
Right.
Okay.
Right.
Couple of tidbits. One thing that I did learn today is that the sellers can pay up to 4% of, is it 4% of closing costs altogether or just?
Yes, and
Okay.
that would include any debt payoff.
Okay. All right. So up to 4% of the sales price. Okay. So on the example that we did at 400,000, that would be like $16,000 that could, the max that a seller could contribute towards closing, right?
Correct.
Okay. Awesome. All right. So any other questions, ladies? It looks like it's all ladies on the call today. Oh, nice. You're so very welcome, Carol. And I'm going to save this link and I'm going to email it to all of you participants. Thank you so much for joining. I do want to get you to the slide so that you could capture Laura and my information. And of course, I'll send it out, but I always like to end with it in case you have any questions. Other than that, I usually discuss just knowing your credit, like making sure that you're aware of what your credit scores are. And
Now, that being said, and I'm sorry to interrupt, Kelly.
that's okay.
When I talk to a client and I pull a credit report, I always do a soft pull, which has no effect whatsoever on your credit scores, but it lets me know, it doesn't even show up actually as a credit inquiry, but it lets me know what your scores are. It lets me know what your debt load is. And if we need to get your scores up, I'll tell you what you can do to get those scores up.
Yes. So
So it's always a soft pull until I
yes.
have a contract. That's the point where I would do a hard pull, but a hard pull is only good for 90 days. So I never do a hard pull up front. Okay, that's a question. Are these free to look up?
Okay, so
In
knowing your
regards-
credit score. So freecreditreport.com is not going to give you your score, but they're going to give you a free report to look at. Usually it's one annually to just check to see what the reporting looks like to make sure it is accurate. Creditchecktotal.com is basically Experian's website. This is one that I think charges a couple of dollars for like 3 days or something. So it's like a trial, but it allows for you to pull all 3 credit bureaus. And it's very close to what the mortgage companies pull up, maybe a point or something off, but usually pretty accurate. The only thing with Credit Check Total is that you want to make sure you go in and cancel the membership within like 3 days, I believe it is. Otherwise, the card that you put on file will be charged, I think like 24, 25, 29, something like that. But anywho, I use Credit Check Total. I use MyFICO as well. MyFICO is one that's a little bit more pricey. It's like $39.95 a month, but I like it because you can go in and you can pull like your FICO because it changes based on the version and based on exactly what you're looking to apply for. So it will pull a mortgage FICO. It'll pull like if you're purchasing a car, it'll pull, you know, what they would actually see. So it'll kind of, oh, gotta go, but thank you so much. Okay, no worries. Thank you, Brenda, for checking in with us. So these are the 3 that I would recommend just based on my personal use. So
Right.
other than that, go ahead.
What I tell people on that, a lot of people are on, what is it? Credit Karma, Credit Sesame, Identity IQ, those type of things. And those are specifically consumer scores. If you're going to finance a car, furniture, open a credit card, something along a consumer line. The mortgage reports are scored completely different. Mortgage reports are based on the types of accounts that you have, the number of accounts that you have, the balances on those accounts. And what you really need is a mix of credit, not just all credit cards. You need, an installment loan, a credit card, maybe a student loan, that type of thing. You definitely need a mix.
That's
But
good.
now, as far as credit scores are concerned, for example, if you have a credit card that is, you have for an example, $2,000 credit limit, and your balance is 1,900, that is going to have a serious effect on your credit scores, even though you make your payments on time, because it appears that you're living off of credit. So the average credit card should maintain a balance of 30% utilization or lower.
Good. Okay, couple little extras here. I don't know if you ladies have heard of HOA, homeowners associations. These are mandatory funds that you pay into the community. Sometimes monthly, but most times annual basis. But basically, this particular association just regulates the community and making sure that all things work as they should. Things are, compliant within the community, and they enforce the rules and regulations that have been written for that particular community. HOAs have its pros and cons, and there's usually, there could be annual fees as high as a couple $1,000s per year. If it's an HOA that's monthly, depending on if it's a condo or a townhome community, could be, between 100 and I have a townhome that's listed now, and the HOA is $425 a month. So it just depends on the community. So when you're looking at homes, look in that section to see if there's a homeowners association that is associated with it. That'll kind of let you know, A, if there is one, and then B, more importantly, how much it is, and how much it is, and how much, because ultimately your lender will have to get you qualified using that amount as well. When you pay your mortgage, you're paying your property taxes, your homeowner's insurance, principal, interest. What else? Property taxes, homeowner's insurance, principal, interest. That's it, right? Oh, sometimes mortgage insurance, right?
Right.
Okay, yeah. So I don't know that a lot of people know that. I think a lot of times you think you have your mortgage is just principal and interest, and then you have to pay your homeowner's insurance and your property taxes separate. Most times, I don't think I've ever closed on a loan that didn't have an escrow set up for the buyers. It's usually easier to pay it that way. You're paying one bill, and then essentially your lender mails out a check from your escrow to your homeowner's insurance, and then also to your property taxes for your county, to your county. Also, who pays your agent? This is important, especially right now with everything going on with NAR and settlements and things of that nature. In the past, most times sellers have provided a full commission of 6% generally to the listing agent. The listing agent then says, hey, I'll keep 3%. And then for the agent that brings me a buyer, I will share my commission, and I will provide that agent with 3%. As it stands now, that's still happening. In most cases, I've seen some cases where commissions have not been offered for the buyer side. In the event that the buyer's agent is not being compensated by the seller from their commission negotiation with their listing agent, then the buyers are responsible for paying their agent. So it really depends on the property you select and whether or not that particular seller has opted to provide an additional commission to the buyer's agent. Any questions there? All right, so here are Laura and my contact information. So you'll have mine at the top. That's my phone number, my email address, and then we also have Laura's that's listed right below. So if you're on your phone or on a laptop or tablet, feel free to snapshot it and keep it for future use. I'm sure you're going to have questions, especially for Laura. She's given a lot of great information tonight, and she's usually always available. And then I think the great thing, it sounds like most of us are on the East Coast, so we should be in the same time zone, I think. So we shouldn't have that issue either. So yeah, so if we don't have any other questions, we are good to go. Thank you all for attending. This was a great group, and thank you all. If you have served, thank you. If you haven't and it's your spouse, please thank your spouse. And thank you even still, because I'm sure you're at home doing a lot of work, especially if you have children, to maintain, and just a household to maintain. It's a true team effort. So thank you and your spouses for your service. All right, well, we're going to get out of here. Thank you all. If you have questions, feel free to reach out to us. And then I will be emailing the link, just the replay link for tomorrow. Well, on tomorrow, and you can just replay it whenever you like.
Thank you, Kelly.